All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for October 19th, 2023. I told the editorial team at our support group that we will publish the book come hell or high water within the week. I'm tired of waiting on them. We're going to get that done. You'll be able to buy the book directly from us for digital download, cheaper than the digital version on Amazon. Plus, we don't pay Jeff Bezos. You can also do the digital download. Plus, we're going to do a weekly discussion board, a 15-week course where each week we go deeply into each chapter, one at a time, with the author of the chapter, with all of your questions, and think of that as the director's cut or the author's cut. And then we're going to record that session so you can do that as a course. That'll cost you a little more because you're getting specific questions answered, and it'll be like a regular course. And then you can also do a digital download, and if you just want the recordings in the future, you can do that, but you don't get your live questions answered in that format. Then I'm going to have one where I do personal coaching as part of an annual coaching program, where you're going to do work in progress. And if you want to be coached, then you will have done one of those two courses, so that we can maximize the goodness of the work in progress with weekly check-ins with focused office hours for you and a small cohort. So that's coming. I should also say the annual research weekend, we're finalizing the details of that. We're going to start uploading that in the month of October and November to build out a dozen really high quality trading systems and research projects, which you can arrange to attend as a student and ask live questions. And then you can also buy the recordings of that if you just want to listen to the Q&A, but you don't have questions you want to answer. So you can expect some information on that. I should also just say, just to be clear, that there are two courses where I'm doing a lot of weekly office hours check-in. One of them is the Foundations course, which gives you a very wide view of all of the skills needed to support day trading, swing trading, core trading, hybrid trading, all of that, all of the foundational pieces to help you rapidly understand what we offer, what we're doing, so you can find what you need and then zero in on it. The second course that I teach is the creativity, let me put it this way, that Griff and Phil teach is the Kata 2 challenge course, which takes one set of patterns and a couple symbols and a very structured process to go absolutely deep with quality coaching by the numbers, lockstep, to give you the depth on the three central patterns that we use on every time frame: the supported spring crossing, the collapsing dragon, and the Kata 2. Those are not the only patterns that we trade, but those three are the core and essential pieces of everything we do in day, swing, and core. So that's a great place to start, and it gives you the coached depth on a specific set of skills. You need to be able to focus and go deep if that's what you want to learn. So you're going to you could either go wide with foundations or deep with the Kata 2. You could actually take those simultaneously. They make a very good pairing of foundations for width and Kata 2 challenge for depth. That gives you a journeyman's level of skill. Now, if you want more than that, the Creativity 202 course, if you thought Foundations course was wide, the Creativity 202 course is galactic in terms of width and depth. But that's where genuine personal transformation occurs, where businesses get formed, lives are restructured, entire psychologies are revisited, and creativity is emphasized. The kind of energy of creativity that will allow you to leverage the insights of Foundation and Kata 2. Absolutely battle tested. So think of Foundations as extremely wide, Kata 2 as very deep, and then Creativity 202 giving you the universal coverage of the entire world for creativity. That is your long term survival and viability into an uncertain future. All right, let's start with the hybrid swing portfolio. 30-minute charts, starting with Alcoa on 30-minute charts. Yesterday, you recall we took the intraday move, decided not to hold it overnight, watched it kind of close the day inside this little noise bucket. I thought about holding it overnight, holding the short overnight, but I elected to get out here. The next morning it gaps down, so I just re-enter with the standard risk box, take the easy exit at the edge of the dragon for 2R, watch it roll over, take the next collapsing dragon and collect another 1R for a total of 3R for the day with no overnight risk. What does that strategy give up? It gives up the gap in your favor move. But I don't mind that. If I can get 3R in here, I don't mind giving up the 1R, and I like to sleep comfortably at night. Your mileage may vary. So we have no overnight risk in Alcoa, and I know how to get back into this thing if it goes below this black box. Is the 5-day, 10-day, and 30-day low. So if that fails tomorrow, you can rest assured that I'm getting back short on that thing with no hesitation. But that just might be the place where it decides to rebound tomorrow. And if they want to rebound it tomorrow, maybe they start that with some overnight futures buying, and then this gaps up. So I don't want to take any of the overnight risk at critical states. So that's why I don't even try. I don't even try that move. But tomorrow, look, there's no support for that thing in sight anywhere. So if that collapses tomorrow, that could be a heck of a trade. AI. I am short overnight on this one because that's a speculative play that has had 2 days of sell-off after a lower high, and that feels like a Kata 2 continuation. And I'm holding 2R of market's money as a buffer in case there's an adverse gap. But this thing just might be the kind of target that gaps and then breaks the 5-day low and becomes a runaway sell-off. And I don't mind keeping that position in hand with 2R buffer. Amazon, on the other hand, here that was one where yesterday, you will recall, we got short on the gap down. At this point, I decided to hold it because why? I had 2R buffer in hand, and it gapped 3R against me. So that +2 became a -1. That's the cost of doing business while you're trying to predict the gaps or play the stats on it. So what do? I just cover like I'm supposed to at the open. I'm grateful because I didn't suffer that move, and then when it rolls over, I'm back in the zero state. And now, at the skin of the dragon, when this has rolled over, which is where I would get out if I was long, I can get short with standard risk and cover here, and I get 3R back. So this whole damn thing nets to 2R. It's just another day at the office. Why don't I hold that one overnight? Because I remember what it's like to get burned. And that's Amazon, and that's a buy on dip opportunity, just like it was here, and just like it was here, and just like it was here. And I don't want to be on the wrong side of that again. And I know how to re-enter. So I consider this to be in a compound critical state, and I'm ready to trade it hard in either direction, but I'll wait and see what tomorrow brings. Caterpillar. I tried the long. Stand by. Tried the long here. It failed quickly for a half an hour loss. When it fell out the risk box, I reversed here. Same standard risk. It closed here, and I'm holding 1, 2, plus 3. So I'm up net 2.5. And it closed poorly, so I'm holding that one overnight. Cliff. Yesterday's 5R short. Today it gapped up. I took the SSC, standard risk, closed it with the dragon exit for 2R. CLS, or CVS, excuse me. Tried the short continuation for about an R. It reversed. I took the 1, 2, 3 entry for 2R and took the RL10 rollover and just made bank and then stayed out of it. Disney. Short, covered. I had 2 positions overnight, added a third one, covered everything, tried the SSC, got an R. When it collapsed, I finally got back on here near the collapsing dragon, and I'm holding this one overnight with 1R in hand. Disney is in play tomorrow for sure. Dish Network rolled over. I took the caught a 2 short on the PSAR flip as it crossed the Bollinger Band mean, and I exited with 1R at the dragon exit. Devon Energy, I took an R after the gap down and stayed away. Electronic Arts, I added a second position off of this short, covered at the dragon, re-entered the short when it rolled over. I'm holding that one overnight with 2R in hand. Electronic Arts, I just covered that one, sorry. Emerging Markets, yesterday I closed the short. I tried the long and I lost an R when it collapsed immediately. I missed the short. I could not get in the emotional zero state. No trade in Ethereum. I like that it's not failing. Maybe there's some move in it tomorrow. Mexico, I took the 1, 2, 3 long for an R. Brazil, took the SSC for a fraction. Intel, took the SSC for a fraction. No overnight risk on any of that stuff. IP was collapsing, so I got the collapsing dragon short for 2. After it resisted and fell back through the dragon and the RL10 rolled over, I took the short with the standard risk. It collapsed the rest of the day for 4R. I'm holding that one overnight. So IYR and Caterpillar are 2 mature industrial companies that are just getting slaughtered. IYR wasn't much better. I tried the short twice. The second one paid off for 3R. Real estate is collapsing. Coca-Cola, on the other hand, is that value play that kept working. I took a smaller than normal risk. Like if you check this risk against the standard risk, it's only half of that risk, but it was it was late in the day, and I was only gonna trade in intraday, so I took half the risk box, and I was using the PSAR flip anyway, and I exited with an R. Regional banks covered the short for an R, re-entered the short for 2R, and then exited in the last half hour. Mattel tried a couple shorts. The second one paid off for an R. McDonald's. Now, yesterday's beautiful emerging dragon continued in an amazing move here. It rolled over, gave me a P1. I took the dragon exit. I took the PSAR flip short with a standard risk and just picked up an extra 1R. And this one paid about 7 on that 2-day swing. That's in play. Merck, oh man, I was feeling froggy today. Had a lot of endorphins and a lot of markets money. This two-banger closed here. It gapped down an additional 2R. So now we was holding about +6 at the open. So I took a third and a fourth position and then took a 1-bar high exit for a great victory. And I was shaking like a leaf on a tree. And I observed but could not trade that trade because I could not get in the emotional zero straight because I felt like I had just achieved my maximum possible risk on a single position and got out of there with an excellent trade. And it scared the crap out of me. And it took me almost 90 minutes to regain my composure. And I just decided to leave that alone for the rest of the day. Microsoft, routine emerging dragon. Why? Well, because here's the peak of the RL10. There's your PSAR flip on that short. This thing broke through the PSAR, came back up again, so I tried that. It ran all the way up here, and I was so busy chasing my tail on Merck that I let that thing come all the way back to scratch, and I felt stupid. And then I could not get into the mindset to trade the short, so I was happy to get out of that one with my skin. Marijuana, this is that 10% mover per day, and this was an SSC, and it went nowhere, which is a first, and then just started fading, so I just cut it for a micro loss. Today was a day of rest in marijuana. And put the pipe down, son. Yeah. NVIDIA was a scratch. PBW was a routine continuation short. The collapsing dragon confirmed that it was working, but I was already short 1. And I had all my extra money in Merck. So this was just a single position that paid 3. And I wanted no overnight risk. Rivian, we exited that one yesterday on 2 positions short, re-entered and then captured 1 with a dragon exit. The S&P just collapsed late in the afternoon, and that's looking bad. Treasuries are also collapsing, so I finally was able to get a collapsing dragon for 2R and then no overnight risk. Tesla just got slaughtered because of their bad earnings revision and Elon confessing that business is actually as bad as it is. So it gapped down a huge amount. This is another one of those where the decision to not hold overnight risk means you also don't get to capture 5R on that risk, but I don't mind because I know how to re-enter and I can take that trade and capture 3 and have no overnight risk. So you places your bets and you takes your chances. U.S. Steel, yesterday's excellent move. I didn't have span of control or capital left to play the afternoon move, and I was pretty much emotionally drained by that one. But today was a pretty strong day in the market. Sniper trade of the day, we're now going to shift to the 3-minute charts. Now, right here, I'm stalking. And I notice that price is rolling down, and the R10 just went from fall to winter. And I notice that here's the northern skin of the dragon, and that's the northern skin of the RL10, and that's where the PSAR flipped. So I'm drawing that already as important support and resistance lines in case this thing ever returns. So as I'm stalking this, I'm noticing where the key markers, the road signs, the tripwires, the alerts are located. Check or hold. So that's what those two blue lines are representing. Let's see if I can do something with that. I'm noticing that VWAP right there too, right? So here's some things that I'm noticing. I'm noticing that dotted red line. That is the SMA 30, which is the middle of the river. That's the Bollinger Band mean, which is the Bollinger Band 30 bar plus or minus 1, and the center of it is that dashed red line. And then here's my dragon. The dragon just went south of the river, of the Bollinger Band mean. I'm noticing the VWAP. When price is below the VWAP, that's bearish. When price is above the VWAP, that's bullish. So if I'm trying to get long on this thing, some things that I can notice are a breakout above the hump of the dragon, or the breaking of the PSAR. This is emerging dragon territory for entry up in here. But this is interesting because I have a harsh winter, and then I have the RL10 reverses. So if I have a harsh winter and I have the RL10 reverse, what are those the first two criteria for? That's criteria 1 and 2 of what? The SSC and the OWL. So this just might be a critical turning point at some point in the near future. Now, what else does this price level equate to? What is going to appear here if this price reverses and that low goes? Then this PSAR decline at some point is going to reverse, and when it reverses, the first PSAR dot that gets drawn is going to be drawn at exactly the same price level as the lower peak of the RL10. Why? Answer, because math. because we are using the RL10 to represent price as the input to the PSAR indicator. So when it flips, the point that it flips to is the point of maximum adverse price. If we had been using the actual lowest low, then the PSAR would have printed to there. But because we like to use the smooth RL10 as the proxy for price, the advantage of that tells us that when the PSAR flips, which is going to be the anchor point, for our standard risk box, because wherever this risk box stops and where it flips, that's going to be the size of the PSAR flip box, right? So RL10 simplifies our life because it makes price action very clear. Look how clumsy this all that noise is. Look how smooth and orderly, and we can interpret what price is doing if we just say the RL10 is price. Is the RL10 really price? No, it is not. It's a simplifying assumption in a mental model that gives us the ability to act decisively and precisely. And in the trade-off between truth and utility, that's a good trade-off to make. Check or hold. Look what we have now. If we have a low, whoops, sorry. We have bar 1, bar 2, and bar 3, which means that if this is bar 1, and then this is bar 2, because it had a higher high and a higher low when it closed, that's what makes this bar 2, which makes this bar 1. So you have to wait for bar 2 to close to determine if it's actually a bar 2. Until this closes, you don't know that it's going to close with the higher low. But once it does, and that's a higher low, that makes this bar 2, that makes this one bar 1, and that makes this one, which opens here, this makes this live, and then your 1, 2, 3 entry is 5 cents above. So you could actually get a 1, 2, 3 entry as it crosses the VWAP. And if you decided to do that, a reasonable risk box would be anchored at the bottom of the RL10, which is where the PSAR is going to reverse to someday, but it just hasn't reversed yet because you are entering early. You are front running the PSAR flip. That comes with a certain additional risk. One of the things that it does is it gets you into the position early as it crosses the VWAP. And then if it fails immediately, what do? You enter a collapsing dragon short, which is our favorite entry. So one of the benefits of the early entry in a 1, 2, 3 is the fact that it's the most likely entry to fail, and if it does, you actually get the preferred pattern anyway. So That's a speculative risk. Yeah, but if you were going to be short here, why should you get long there? Why don't you wait for confirmation? Because price might actually move up so fast that you end up getting an entry up here instead of down here, and then you'll kick yourself in the groin. So if you know that's true, you've got to make a professional decision about what to do to manage the tension that is associated with entry decisions in the gray area of a potential turning point. In our teaching, the earliest you could get in is a 1, 2, 3, or you just simply stack an MMRB with your standard risk and you just say, if it ever gets above here off the low, I'm just going to enter. Or you might say, if it crosses the VWAP after a harsh winter, I'm just going to enter. You're a grown adult. Study your craft. But it's important to teach you what to look for inside of the logic chain that we're building here as part of that upward trending move that has already crossed the VWAP. Because any price up in here, it's a positive bias because it is north of the VWAP. And it's still early days if you enter in here, because here's the reversion to the Bollinger Band mean, which is going to look like that. This is how far the traders were able to move it away from the Bollinger Band mean. So that's 1 unit of power. That's how far they could move it on that surge downward in the harsh winter. Check or hold. How far above the Bollinger Band mean could they move it? They could move it as far north as they were able to move it south. So I come to here, which is where the new Bollinger Band mean will be, and draw an equivalent sized box, and I say, until proven otherwise, not only could this thing get back to the PSAR flip, if the traders flip from the short side to the long side, there may be enough power to take it from here all the way up to a symmetrical move above the Bollinger Band mean, which means it could get to the PSAR flip test and go. So maybe target 1 is where the PSAR flipped, which was the last place that the R10 got to on the upside. So that is a reasonable target. So if I enter here, it is a reasonable target to the Bollinger Band mean. That's just the reversion to the mean. And then the next target would be the peak of the dragon. Target 1, target 2. Target 3 would be the peak of the RL10 and the PSAR flip. And target 4 would be the symmetrical power move from the leg down to the leg up. So now what I have on a risk box that might look like this, I've just constructed a narrative of 1, 2, 3 units of reward, not unreasonable, against 1 unit of risk. On that basis, am I persuaded to take this entry at the PSAR flip before the RL10 crosses the dragon, before the PSAR flips? I might be. There are 4 things that it takes me to have a trade: time, will, pattern, and money. What we just did was spent time with a standard template on using advanced day trading techniques at known turning points in our reliable patterns, that this is a way that I can get an entry here instead of here. This is entry number one. Our target one is where the SSC would typically enter. If I'm trying to get a better entry than the SSC, I have to take on a little bit of extra risk because of the increased probability of failure, but the increased probability of failure means my R box is smaller. I get into the collapsing dragon anyway, and then I get a 3-to-1 instead of 2-to-1 reward to risk. That is the pattern. Do I have the emotional will to trade this with professional beliefs and skill? Am I in the zero state, or am I hoping or fearing or praying or any? If I'm doing anything except other than disinterested trading, then I'm not in the zero state. This is early in the day, so there's plenty of time for a move to the upside to unfold. And I have enough money in the account to put one chip, one unit of risk on that trade. Taking all of that into play, I have the conditions for time, will, pattern, and money, and the only thing left that I have to do is decide to pull the trigger or not. You decide. But you have to have all four of those things in play. Check or hold. If you want to explore more of this, the bar by bar trading home study course has 300 examples of this kind of trading that we did live with students and coaches and trade frames just like that in the day trading frame of reference that you can replay at your leisure. Now, here's what I notice. Price has continued to improve. The R10 reversed up. Even the RL30 started to... Now take a look at this one. That's nice. The RL30 and the Dragon have both rolled up. Let's take a look and see what that... Let's count them off. 1. Harsh winter. Yes. 2. R10 reversal. Yes. RLXD and P1. Yes. Regression line crossed the Dragon, and we got a P1 reversal where the R10 crossed the RL30. Yes. What are those the three criteria for? The SSC entry. Is this an SSC entry? Sure. It's on the north side of the VWAP. I know where the PSAR is going to flip to, as we just said, right where the R10 reverses. So the difference in the 1, 2, 3, the 1, 2, 3 entry was right here, 2 bars earlier, and you had to suffer this adverse move to the bottom of the Dragon, which held and then continued on. So if that move makes you exit, then you don't understand that your risk box is noise and you don't have an actionable signal until it violates below here. If you exit right there, it's because you don't understand that box, or you are trading at too large a level of risk and you're scared about losing 1R, or embarrassed to lose 1R, or embarrassed to get long and then immediately exit. But for whatever reason, you are exiting on no signal inside the noise, and that means that you are not trading professionally. You don't exit until that level is breached, and if it is breached, you turn that into a minus 0.2R of position sizing risk. That's what you do. One execution risk equals 0.2 position sizing risk. If you understand that, you will not exit inside of the noise box. We're north of the VWAP. The R10 has crossed the dragon. Price in this bar has actually gotten to the Bollinger Band main. The peak of the dragon and the peak of the R10 still remain in place as upward targets. Check. You could pick the bottom of the dragon now and the bottom of the R10 as triggers to the downside in the same way that you picked these two guys as triggers to the upside. What would we call this land between the triggers? Crocodile River, the tactical space, the danger zone, where good ideas go to get murdered. I mean, the one good thing, though, is that we're on the north side of the VWAP, so this is still positive. So if you entered at the 1, 2, 3 entry or at the PSAR flip, you have this much in hand. Against, let's just call it this much risk. Could you make a decision to move the box, your risk, from here and just call it the Bollinger Band mean? Could you do that? Is that allowed? If you make that decision, from your entry here, or if you use this entry, you'd actually have an extra wedge. You would actually have this additional wedge. And so let me just show you the difference, that one of the things that you gain in advanced day trading, this is not the foundations course, fellas. One of the advantages you get by entering here is that you get an extra piece when price is up here. And now all you're doing is you're giving it this much room north of the Bollinger Band mean to play around with. But you're preserving that much. And you got rid of that risk to your core capital. And we would call either one of those decisions to move your stop up to the Bollinger Band mean a no lose plus dinner for two, because you're not going to lose any money. And remember, we still had this adverse move here. We're still looking at a potential of it moving up to here. It could still do that. But now this is an entirely different proposition, that if I move my stop to no lose plus dinner for two, the crocodiles don't get me, and I completed the task of what to do near the river. Get my risk out and live with it. Oh, guess what? I forgot that it did that. That's good. I couldn't have picked a better example. If your stop was here, you either got that trade or this trade, and you missed all of this. How many of you would have exited somewhere around in here, even though the PSAR's down here? A bunch of you. If you were treating this as one unit of position sizing risk, you could persuade yourself that by getting out here, you're only taking a zero point 0.6 loss instead of a full 1.0. But look what that does. It makes you take a loss that feels like you just barely averted disaster. That's why I make this whole thing just 0.2 of position sizing risk. So I just wait because I'm at a collapsing dragon down here. That's the point. Now let's take a look at this. If I come down here and I look at the Williams percent R, now this is a WMB3 lesson. Oversold, up, no uptick, so no entry, no uptick, no uptick, no uptick. Here's the first uptick. So the first place that I can even think about entering long is where the SSC entry and the PSAR flip even gets me. So the WMB3 doesn't even allow me to get long here. And then when this happens, I have no trade anyway. So the WMB3 gets you long here, and then you probably scratch it. No harm, no foul. So we just keep playing. The next time that I get an oversold, can you see why you might want to specialize in one symbol and really understand what it's doing? Here's an oversold condition. I come up to here and I see, oh, there's an uptick. I could actually get long after this bar closes. But guess what? The mechanical entry on that one is here. 5 cents above the high of this bar. But this bar opened here and then sold off, so there's no entry. It's still over. Now I still get an uptick. Now I can go test this bar. Here's the high of the bar. This is the mechanical entry. It did not make another new low, and the bar breaks out. This is the WMB3 entry right here. If I take that entry, where is my execution risk? Well, the first thing I'm going to do is I'm going to compute my R10, and that's the yellow box. And that turns out to be 7 cents. If I round that up to 10 cents, I get the orange box. So statistically speaking, I could pick this exit because it's a MMRB away from the entry. I could also pick this exit because it is a rounded off MMRB. I could pick this as an exit because it is the PSAR anchor. I could pick this one because it is the local R10. So suppose I gave you this entry and I said, you get to decide which one of these risks to take, and you get to keep whatever money this trade makes as long as you do not let it go below 4. So in that frame of reference, if I give you the entry, I've taken your risk away, and I said, you don't lose any money if you exit north of 4, then I would ask you, where would you put your stop, knowing that this thing is near the low of the day and we had an amazing move to the upside. And we have the PSAR, we have the VWAP here, we have the Bollinger Band mean there as reasonable upside moves. Where would you put your stop? 1, 2, 3, or 4 for execution? Knowing that wherever we put that execution risk is only going to be a 0.2 position sizing risk for me, and it's no risk to you because you're doing as you're told. I'm going to underwrite the 0.2 risk if you pick 4. That's really an important mindset. And while you're monkeying around with that, this is what price did. It got all the way to the PSAR flip and never looked back for any of it. So whatever you picked, it's working. And now when price is right here, I'm going to ask you, now that price is right here, and your entry was right here, you now have this much gain. And then I'll ask you, what was your execution risk? Was it here? If so, you had 5, 6. That one, that would be a 6R gain if you picked position 1. 2, so that's a 6R. This one's about 3.5 if I can round it off. The R10 is about 2.5. And this 10-cent risk is 2R. So let's do the math. Let's suppose you picked 3 for a 10-cent risk just because the math is easy. And if you were going to risk $100 on that trade at 10 cents of a risk, and your position sizing was going to be 0.1 times 5, your position sizing risk is 50 cents per share, and you were going to risk 100, you could buy 200 shares at that price. And if you decided to exit right now, you end up making 2R. You just made $200 minus a couple bucks for the cost of commission. In 1, 2, 3, 4, 5, 6, in 18 minutes, which is $600 an hour. That's the seductive lure of day trading. But you need to know that. You need to know the math. These yellow dots represent positive affirmation that we are making progress in the trade. It crossed the VWAP. It crossed the Bollinger Band main. It broke the skin of the dragon. It broke the PSAR flip. And look what we did. We made 2R in the tactical zone using the widest of the 4 stops. What if you wanted to increase the shares per trade? Don't change the architecture, just change the dollars at risk from 100 to 200. Never change the architecture of your trade. If I chose this as my execution risk, then I have to study that to see, is there a reasonable 2R trade to the top of the tactical zone? Yeah. So you don't ever even try to put a second position in here until you invoke the 2R battle drill and you get beyond the tactical space. Because then if you try and it starts to fail, you exit in here and you still get paid. Let me know if you're enjoying this lesson so far. Hey, guess what? You don't even get exits. You don't even get an exit signal on this trade until you get up into this region. And if you took that exit here and you either got a 2 to 6R, depending on the choices you made down here, let's take a look at the choices that you had on the other side. So no matter where you got in, you got a good move in hand. Let's just remember that. A move worth preserving. What are these different exit choices? These turn out to be a lot more important than the decision of to enter here or here. Just get in. Just get in. Where you should suffer is in this exit decision. The choices arrayed here was the very peak. Notice I'm only using a simple bar and the close. So that was the peak, and up until that point the R10 was still working. Then this thing opened here. It could only make a high to here and then sold off to there and closed here. That was enough to make the R10 begin to roll over. Check or hold. You might decide to exit on a 1-bar low and you might have gotten out here. You might have triggered here and gotten that as your fill. Or you might have hung your R10 risk box. That's the yellow box. That's 0.07 cents. Maybe you used the full 10-cent box on the front end, but you decided to use the R10 and just hang a chandelier off the top. That would get you out here. If you did a 2-bar low, you get out here. That's also the dragon exit. Why is it the dragon exit? Because we have remember this was a minimum better of a 2R here. So we've got an abnormally good trade. So that means I'm going to start tracking the northern skin of the dragon. And now when price 1, 2, 3, bingo. I might take the spine of the dragon. I might take the lower skin of the dragon. I might take price touching the PSAR. And over here is where the RL10 crosses there. So I might pick 1, 2, 3, 4, 5, 6, 7, 7 reasonable decision rules on when to get out. I might have had a rule like, hey, just use the Bollinger Band mean or the PSAR. PSAR would get me out here. I might have had the lower skin of the dragon. Gets me out here. Because of the abnormally good move, I might have wanted to accelerate to the upper skin of the dragon. That's reasonable. Or I might have picked the R10 off the top, or I might have picked a pattern, a 1-bar low, a 1-2 low, a 1-2 3-bar low. That's 7 legitimate choices, whereas you only had a couple early, and you're making this decision when you have open money and you're worried that if I get out, then it's going to go without me. And so fear of missing out makes that a difficult decision. No, it doesn't. Because that's a separate decision on should I get back in? Where should I get back in? Not later than the upper skin of the RL10. So if I got out here and that thing reversed and took off, I get back in right there. No matter how far down the stack it goes, if it ever crosses back above the R10, I just get back in. I don't care if it happens here or it happens way out there. In fact, the sooner it happens, the better I like it, because then it means there was hardly any selling pressure and the buyers immediately came in. And the sooner it reverses, the more likely it's going to be a big move. And that doesn't mean I was wrong. It just meant I was following a rule, and then I was adaptive enough to immediately get back in. That doesn't make me stupid. It makes me a trader who understands this style of trading. Check or hold. So if you used the R10, just to keep it standard, if I'm just measuring against the R10, I personally like using the R10. 1, 2, 3. With the R10, any one of those decisions gives you a minimum of 3 and up to 4. So I got to just ask you, should you really lose a lot of sleep over which one of those rules is better than the other? Is it really worth shortening your lifespan from stress to decide between where in that little stack you're going to get out? Pick one and live with it until you get enough repetitions and you study the difference. Pick one, get in, compute your R's, do the math, and then make a continuous improvement of performance by studying the results instead of trying to predict ahead of time which one of these is going to be perfect for you. Get one that's good enough that you can live with on your written trading plan and execute it, and then study the statistics. And I'm not even going to talk about the PSAR flip trade all the way back to the VWAP from the peak of the R10. If that was your standard risk, shouldn't you really be thinking about getting short in here somewhere? Initial target, Bollinger Band main, secondary target, the VWAP? Sure. This happened from 1245 to 1:30. That's a 45-minute window at lunch. You can't make money at lunch trading. Really? Really? Do you have to worry about the opening? No. Or the close? No. Can you wait and see the shape of things? Yeah. Hey, I want to show you something else. How far above, from the Bollinger Band main to the R10 excursion to the peak excursion here? That's pretty close. So look how nice and orderly the dragon is to help you. Look how precise the little footsteps are of the PSAR. Take your pick. Look how useful the VWAP is with giving you a directional bias. Look at the shape of the river for a hint of the longer term trend. There's still 3 hours left for this thing to find support and continue higher, if you even need that. Since we're in the metals, look at this. Slightly expanding, stable support, current peak, tactical, trigger to go short. Train has come into the station at the VWAP, right in the middle of this thing. Price is right here, still north of the VWAP, or still north of the PSAR flip. If this price goes through that level, I'm long right here, and I'll pick that as my risk, or that as my risk. And if this fails, I'll go short with the collapsing dragon, and I will call this 0.2 P risk, and I will call that 1.0 execution risk, which means there has to be 2 units of reward to the upside, which there is. 15 cents is the R10. Check or hold. Bottom of the dragon, trigger. Bottom of the RL10, trigger. So guess what I could set this up as? An alert digitally in TC2000 or your platform. So if price breaches this, it sends an E alert to tell you hey, wake up, so that if it breaks below here, you can decide if you're going to collapsing dragon, or you might just say, I'm going to hit that automatically, and I don't even need the alert. And maybe I have an alert to go long one and short one, or short one, and that is my unit of risk. Take your pick. Frame your trade. Do routine things routinely. Uh-oh, we're coming into the alert, right? Notice price is holding. It's holding, and the R10 is holding right there, right where it held last time at the base of the PSAR flip. And its price is actually starting to move up right here. And it's sitting right on mathematical fair value. If you are risk tolerant, could you enter a 1, 2, 3 here? With an execution risk right there, with 2 units of reward to there, and then if it goes up here, it's a breakout to the upside? Ah, yeah, maybe. Or if it broke down here, yeah, you could. That's a trade. Time, will, pattern, and money. You decide. Hey, what if you did that? It never even went long. And I'm going to put a risk box on it from the R10, and I'm going to be short from here as it breaks below the triple bottom. Check or hold. And it's 2:15. I got hour and 30 minutes. I get 90 minutes for this trade to unfold. So I have time. I have 30 bars. That means the close is over here somewhere, because that's about 30 bars, I think. Should you be at no lose plus dinner for 2 by now? When price is right here, and your entry was here, and your risk was there, and you're holding this much open gain, you're already 1.5 or 2. Yeah, you could have your stop to here. Hey, maybe it's the edge of the dragon. Maybe it's the 2-bar high. You decide. Get your risk out and live with it. Good problem to have. If you had used a decision rule of the PSAR until you got 2R in hand, right about here, you've got to decide, am I going to put a second position on with the 2R battle drill? Or where am I going to put my stop? With the PSAR, skin of the dragon, spine, or the front skin? You make a decision. Here's a 1, 2, 3 exit. Here's a RLXT exit. There's a PSAR exit. You gave back 1. That's 4R. 1 hour. If you were risking $100 an hour or $100 a trade, you made $400 an hour on that trade. Do you have to bet the farm? Nope. So this morning I got an alert from Trader X, who saw this. He framed that as a critical state, and his alert to me was, yeah, his trade frame was a break below 21 would be decisive, because it could come all the way back to here or all the way back to there. So that's 21. Leg 1, leg 2. Hey, but if this worked, that could be a return to there. That's 50 cents. That's $1. There's your 2 to 1 reasonable reward to risk ratio. So I notice on my little tactical display that when this thing rolls over, I see that I have a high, a specific low at the RL10, a peak of the RL10 that is lower than the previous high. So I have lower highs, and then I have this little rising PSAR. So I can get short at 4 on a PSAR flip with this risk box to the top, with a unit of reward back to the official collapsing dragon. And then if that works, I can get a second position. Or I could just use that as an alert and take the collapsing dragon. Or I could take this one and then just notice the collapsing dragon and be content with a single position. And I'm noticing that this early alert is getting it just above a test of the VWAP. This one happens well below the VWAP when I have a negative bias. But the fact that I've got a lower high means that the positive bias of being north of the VWAP is rapidly disintegrating. Aggressive, conservative, mandatory, optional. In any case, standard risk. Standard exit. It returns anywhere from 1 to 4R, depending on how you arranged your entries. Oh, and there's another one, because the pattern continues in exactly the same fashion. Lower high. Oh, lower high. Lower low. Collapsing dragon. Front run with a COTA 2, RLXD. Same standard risk box. That box is the same as this box. Same exit, again for about 1.5R in Mattel. And that's the afternoon lunch trade. So WMB3 Collapsing Dragon, SSC, Kata 2 framing, 3-minute charts, 30-minute charts to get your alerts and the key turning points, 3-minute charts to refine your trading technique. End of lesson. If you want 200 lessons like that, take the home study course for bar by bar trading while it's on sale. All right, here's Lou. You might ask me, hey, Ken, how could I do bar by bar trading live with you as my coach the way you did to create that home study course? That's a separate course. That's a lot of work for me. And I would do it for the right incentive. Um, opens, reverses, he gets short looking for this. It works right against him. He takes a fractional loss of 0.3. I like that. I'd rather see the stop and reverse. I'd like to see the short on the PSAR flip at the Bollinger Band mean as that fails. Although that's the VWAP, I think is got. I'm sorry. Oh, better yet, the VWAP failure gets paid. Rejection of the VWAP and it leaves the dragon, that gets paid. 1, 2, 3 entry, RLXD entry, PSAR flip entry, all of those get paid. So this one turned into a 0.3 loss, but you can see that there was some opportunities there in the Goog. Alcoa, on the other hand, and Lou is just showing off here, I think. Because he doesn't trade the gap fail. Come on, stupid pen. He doesn't trade the gap fail with an entry right about there. Well, look how small his risk box is. So if he let it move a risk box off there, he doesn't take the 7R trade here or the PSAR flip with an entry here and the 7R trade there. He just takes that one for 6R and leaves the other 15R for us to discuss. And that's a trade in a second position and a beautiful exit. Well done. And Brazil, he gets 2.2R in the usual way with a quick scratch at lunch and then a standard risk. Oh, and this one exits routinely, re-enters on an emerging dragon, gets paid, doesn't even take the third leg, and decides to go home with 8R for the day. Understandable. Mark brings home about half an R. Let's see what we got here. PSAR flip, waits for the VWAP break to get long. Reasonable exit. After the PSAR flip and a VWAP collapse, he's short. Second position. I think this is a late exit because I think you should have gotten out in this bar, but you got lucky that this failed and you got here. I don't mind the second effort. I think you stayed too long when it leaves the dragon, get out, then be short here. Your second position should be here, That's a little bit late. That's a pretty good exit. This long with the second position long and exit. This exit is late. That exit is late, but not bad. I like that effort. You stayed out of the chop until it cleared. That's good. Your reentry should be here, not here. And then you started pissing away all of the gains from here with mental tiredness. I don't think your 0.64 is right unless there was really a lot of losses in here. But I think you got to manage your energy and emotions to a little bit more. Brian gets a standard collapsing dragon off of the bend of the dragon short for 0.65, right along with his routine in a 60-minute trade. Perfect. George, go take a look back at my chart on this trade in EWZ. You got about 5 trades in here where this should be one trade. You are exiting inside the noise and you are grinding yourself to death. Whereas if you get short here, that's reasonable. That's a reasonable exit. You should be long here with a risk box there. And you should never get out of this until the R10 rolls over and you get out here. And you should have made just under 2R on that trade. Good. If you're going to scratch it, maybe it'll pay a little bit, but I like the scratch. Not losing money on that one. A micro loss, a micro gain. And you're stopping after 2 hours in the day, and I tried to show you what's available on 30-minute bars after, like all of this. Fractional gain, that's reasonable for Sean. Let me take a look at this a little closer detail. For a minute, I thought that was George. All right, so we got kind of a sideways channel. It's riding along the VWAP here. This little breakout. I like that. This move up here, you take this exit for a fraction. That's fine. Notice this never breaks. This is kind of the same entry here as this one. If this was good, that's going to be good. You would have gotten paid a little bit. This little breakout, you probably would have gotten paid in here. Although this might have broken this way first and then reversed. That's a hard thing to trade, but this is the peak you're looking for. And the breakthrough of the RLXD, it's now back to normal. That's the trade I want you to get. All the way back to the VWAP. With this as your risk box. After the exaggerated move and the smoke, this is after the smoke has cleared and this is an orderly rollover and the dragon is rolled over, there's your RLXD entry short with a standard risk box all the way back to the VWAP for 1, 2, 3. This short is not a signal. What's the pattern? Don't know. Can't tell you if you did it right or wrong because I don't know what the pattern was. Well, no. Okay, so I'm sorry. That was long. That's an emerging dragon pattern long. I don't mind that. It came back to the VWAP, to the skin of the dragon. That's not a reasonable execution exit. If that is your long, the first place that you have a reasonable signal to the downside is if the dragon doesn't support. So your execution box should be that. which means that this trade would have worked all the way up to here and then exited somewhere up in there. So the execution box is too tight. Then your re-entry should be here. If you were going to get out there, your entry should be here after the R10 wiggle and the emerging dragon instead of here, and then that actually pays you better. Don't neglect the PSAR flip. After a big 1, smaller 2, tiny 3, can't you feel that rolling over? PSAR flip, dragon rolls over. There's an owl entry short as it crosses the VWAP. And if that's your risk box, there's 3R to the bottom. Then here is a COTA 2 short. You won't lose money on that trade. Yeah, that's you shouldn't lose money on that trade. Stop and reverse. You might have scratched this one when it broke the VWAP. You wouldn't lose money on that trade. And then here's a COTA 2. You don't lose money on that trade. Here's a PSAR flip. You don't lose money on that trade. You got to remember that each trade that you make is the first one of the next 1,000, and you can't let the emotional cost of a trade that didn't work to make you run out of energy. You need to have more cardio and resilience. This downward trend, we should have been able to detect that with all of these lower lows and lower highs. We got to see that. All right, fellas, that's everything for tonight. We'll get them tomorrow. Standard work in the reports. I leave it to you. It's 10 o'clock already. And you need time to prepare. And we'll catch you tomorrow.